There is perhaps no topic that looms larger and is more central to the world of modern conspiracy theories than central banking.
When people hear the term the Fed in the news, many are not aware of what it exactly is, how it works, why it exists, or even when it was created.
One thing that has struck me from the very first day I was in this role is that nobody or very few people actually understand what the Fed does.
With public education being a main goal of most central banks, it's actually quite the pity that they continue to be shrouded in such mystery. Maybe it would be impossible to convince the public of anything about any institution in this climate. The disparities driving us apart only continue to grow, corruption is at an all-time high, and the Epstein files have given us a glimpse behind the curtain where a group of sociopathic pedophiles is calling every shot. It's also hard when you have clips like these constantly making the rounds on social media.
Look, this is all like when you have a fiat currency system and you go off of any type of gold standard or anything that kind of limits the government's ability to just print as much money out of thin air as they want to, you get this thing where we live in a cycle of constant inflation.
This is Jekyll Island, where in 1910, representatives from the Rockefellers, Rothschilds, Morgans, and other private bankers gathered secretly to draft the legislation that would create the Federal Reserve.
3 of the wealthiest men in America boarded Titanic in April 1912. All 3 died. 20 months later, the United States Federal Reserve was signed into law, fundamentally restructuring the entire American banking system. Coincidence? Some say not.
These short TikToks and Reels claim to distill a wisdom that the Epstein class is trying to hide from you. And to be honest, they're pretty damn convincing. I experienced something similar myself being a teen in the 2000s. A 2-hour documentary uploaded to YouTube called Zeitgeist. Like many who fall down the social media rabbit hole these days, I became acquainted with the Panic of 1907, the Rothschilds, JP Morgan, and the infamous list of countries that were yet to obtain a quote-unquote Rothschild-owned central bank by the end of the Second World War.
The fact is, the bankers now had a streamlined machine for economic manipulation.
It's alive! It's alive! It's alive!
If you've ever been exposed to this kind of content before, then the list of conspiracies will seem pretty familiar to you. I'm not going to go too far into them, and plenty of other shows do just that, but I do want to go over a few of the conspiracies for just a moment. One conspiracy states that the Panic of 1907 was an engineered crisis by JP Morgan. If you want to hear about the Knickerbocker Trust and the United Copper Company, again, there are lots of resources out there that beat a dead horse. But basically, JP Morgan led a response to the Panic of 1907, acting as a sort of de facto central bank himself, and prevented a 50% dip in stocks from becoming a full-blown depression. He then recommended the US government create its own central bank, or Federal Reserve, to prevent panics in the future. It is also alleged that JP Morgan whipped up the panic to crush his competition and consolidate them into one giant money trust. And here's why installing the Federal Reserve would go on to be such a bad thing. According to all the YouTube conspiracy theorists, every central bank is owned by the Rothschild family. Just like many conspiracies that have gone viral, there is a kernel of truth here. Until 1946, when the Bank of England became a public entity, the Rothschild family did have a significant stake in England's central bank. The same goes for other European central banks until the end of World War II. However, after going public, there is no evidence that the Rothschilds are shareholders in any central bank, especially since going public means there are no such thing as shareholders. Rothschild-owned central banks, which aren't owned by any Rothschilds, are installed in a nation-state to enslave a population through a debt trap. Since the central bank prints money and lends it to a nation's commercial banks at a set interest rate, the debt can never be paid off. Thus, the people of a nation which uses a central bank are simply cattle, paying off a debt that grows faster than it can be shrunk. However, even this claim falls apart under scrutiny, and I address the idea of a debt trap with this episode's guest. I'll keep this monologue short because I wanted to start our conversation on central banking with an expert. In a moment, you'll hear my interview with Dr. Carl Walsh, who is a distinguished professor of economics from UC Santa Cruz, whose research focuses on monetary policy and central banking. For the purposes of our conversation, I highlight the fact that Dr. Walsh was a visiting scholar at the central banks of Philadelphia, Kansas City, and San Francisco. I put links to some of his work in the show notes. Regardless of what you believe about central banking, there is a pretty strong argument in favor of its existence. It is also the case that the stakes to get this right are pretty fucking high. We can use the Great Depression to illustrate this point. For the Panic of 1907, JP Morgan became a lender of last resorts to the commercial banks, preventing a panic from becoming a full-blown catastrophe. Shortly after, America's central bank, the Federal Reserve, is created. So when the stock market crashed in 1929, the government and public didn't think a JP Morgan-like figure was needed. However, what they didn't anticipate was the central bank screwing the whole thing up. When the market crashed, the Federal Reserve didn't act as a lender of last resorts, and it tightened monetary policy instead of expanding it. At the worst moment possible, the central bank created to address a panic helped create the conditions for a Great Depression, and there was nothing any single financier could do to stop it. Since then, expansionary monetary policy by central banks has helped prevent another global depression. By not relying on a JP Morgan type, central banks have been able to address multiple economic crises. But when the public and central banks abdicate responsibility, disruptions and catastrophes are allowed to spread like wildfire. So no, central banks aren't owned by the Rothschild family, they're not singularly a debt trap to enslave nations, and they weren't involved in the plot to assassinate John F. Kennedy, because why would that make any sense? If you ask me, the conspiracy theories surrounding central banking prevent us from asking some really interesting questions. Are markets and the financial system the best way to organize human societies? Are we all right with the people running our financial systems getting rich in the process? And to what degree are central banks a way to further pillage the global south, with international banking systems continually recommending tight monetary policy to fix their debt problems? I'm your host, Michael Mooney, and this is episode number 19 of the Jet Fuel Can't Melt Steel Beams podcast. What is central banking?
This is the age of misinformation, get information. No homosexuals, Democrats, or immigrants in your nation. I gotta think about anything else. I try to cope, but it's bad for my health. I don't even think that anything helps. This is the most paranoid that I felt. This is the age of misinformation, how could you be?
Thank you, Dr. Walsh, for sitting down with us. It is much appreciated.
My pleasure.
So you did spend some time at the Federal Reserve Bank of San Francisco. Can you speak to a second just, what your kind of role was there, and why do we need a central banking system in the first place?
So I spent 2 years as a senior economist in the research department at the San Francisco Fed. And basically the role of the research department was twofold. One, it was to conduct sort of academic level research that you published in professional journals, but it also provided the sort of knowledge base on which you briefed the central bank president when they went to Washington, D.C. for monetary policy issues. Or at least that's the role I was involved in. They also had economists who were more focused on financial regulation because the regional banks have input into the Federal Reserve's decisions about financial market regulation. So, and why we have a central bank, I think, was, central banks help to serve to promote economic stability in their region. They're typically institutions for a nation, or in the case of the European Central Bank, for a region that has a common currency.
Yeah.
And they help to maintain macroeconomic stability. And typically they're also involved in financial market regulation, because maintaining financial market stability is really important for maintaining overall economic stability.
Okay. With central banks, we have some goals. Are there any drawbacks to having a central bank before we get too deep in the weeds?
Yeah, there are a couple, I guess, that are not inherent to central bank, but you can have a central bank that doesn't fulfill its role. So, for example, the Federal Reserve is often blamed for letting what would perhaps have been a normal cyclical recession in 1929 turn into the Great Depression, because they were focused more on the exchange value of the dollar. They didn't step in when we had the banking crisis and thousands of banks failed. And that was a lesson that we learned in the global financial crisis, where the Fed did actively step in. We were very fortunate, in my view, to have Ben Bernanke as chair of the Fed at the time, because he was one of the world's leading experts on the Great Depression, and it really emphasized how it was the collapse of the financial system that created the Great Depression. So one problem is they may not do their job. Um, the other is that they can be subject to outside, usually political pressures, to take a
Mhm.
short-term view of things. And the central banks are kind of the only institution that's really charged with trying to maintain low and stable inflation. And that really requires, that you get the public's confidence that you're actually going to deliver low inflation. And that requires you to behave in a consistent way that's focused on the longer run. And politicians typically are more focused on the short run. And
Yeah.
so there's a tendency to try to pressure the central bank to engage in more expansionary policies than may be appropriate. And we're certainly seeing that today. The Trump administration is really pushing for lower interest rates, which would stimulate the economy. But at the same time, we're still not back to inflation where the Fed would like it, which calls for somewhat tighter policies. So you've got a tension there.
Yeah.
It's one that central banks often have to balance, but the short-term desires of the politicians don't necessarily lead to the best trade-off between those goals.
Gotcha. And I think you're kind of touching on a subject that I was reading about for this interview, Fed independence. And I do see that that is kind of in the current climate under attack. Do you see, just because we're already kind of touching on it, do you see what Trump is doing, in terms of Jerome Powell as an assault on federal independence, or?
It is, I think, very directly. When you think of the structure of the Fed, it's kind of unique among central banks because it has, aspects that it's a government agency
Yeah.
created by Congress, and you have the Board of Governors appointed by the president, subject to Senate approval, and that's the Federal Reserve System, the board in Washington, D.C. But they also have 12 regional banks that are privately owned by the member banks. And they have boards of directors and they appoint presidents of the regional banks. Now, the president's appointed, the regional banks nominate people, but the board of governors can veto a potential president. But they all participate in monetary policy decisions. Now, the legacy of the Fed has those regional banks because, when the Fed was created in 1913, the US economy was not integrated, particularly financial markets, as they are today.
Yeah.
But having the regional bank still brings a regional perspective, a broader perspective of the national economy to the table in discussing monetary policy. So they get a real sense of, well, how are things doing in the San Francisco region versus the Minneapolis region or the Atlanta region. And so it's helpful in kind of bringing that perspective. But, the regional bank presidents are not appointed by the president or even the
Yeah.
board of governors. So it's kind of this strange mix that is unlike, I think, any other central bank.
Very interesting. Okay. Now we're going to get into the kind of more conspiratorial stuff for our
Mhm.
listeners. Okay, so there are a lot of conspiracy theories surrounding the Federal Reserve and central banking in general. Um, the social media age has probably made things severely worse. There's a theory that the Panic of 1907 was engineered by the was engineered to make way for the Federal Reserve, that every central bank is owned by the Rothschilds. Kennedy was assassinated for trying to pivot towards silver. There are many, many things like that. So throughout your career, especially as it's touched the literal system of the Federal Reserve, have people always been this conspiratorial?
I think so. And I think the reason is that money is somehow a magnet for conspiratorial theories. And I think it's related to, particularly in the world of fiat money that we have now, where there's nothing like gold actually backing this stuff. It's something kind of magical about the fact that you and I have to work hard to get money, but
Yeah.
central banks can somehow kind of create it out of thin air. And, I think that just inherently makes it mysterious and lends itself to a lot of conspiratorial theories. And
Yeah.
I think people are often very suspicious about power and financial markets and the belief that somehow people in financial markets have, well, they typically do have a lot of power because they got a lot of money, but somehow that there are conspiracies underlying a lot of what goes on in financial markets.
Yeah.
But central banking is always, it's mysterious. That's one thing nice about the dual mandate is that a lot of what the Fed does is kind of in the plumbing of the financial markets to make sure the financial markets operate smoothly and to implement monetary policy. But with the dual mandate, it's much easier for the Fed to explain why they're doing what they're doing. That is, what they're trying to achieve. Because like many things, I can drive my car around very safely, but I don't really understand how the steering mechanism is designed within my car. I don't need to know that engineering aspect of it. All I need to know is if I want to go left, I turn the steering wheel left.
Yes.
And so a lot of with monetary policy, people in the public don't need to know the ins and outs of the details, but it's important for them to understand what the Fed is trying to do. And that's where the goals and being transparent about the goals is important. Now, let me just, one other aspect about money that makes it magical is,
Yeah.
in the US, we can use green pieces of paper, less and less so, but we can use green pieces of paper to, buy all kinds of things. But we can't do that with blue pieces of paper or white pieces of paper. So what gives one type of paper just this inherent power to purchase things we want and other pieces of paper don't? So,
although I would say that at least in the past, 10 to 15 years that I've been alive, it seems like our money looks a little bit more like monopoly money. You got that kind of blue stuff on the 100 and the pink on the 5. So
yes. And it's ironic. I mean, they do invest a lot in preventing counterfeiting, but currency itself is a pretty small part of what we generally think of as the money supply in the economy like the US. And in fact, so about half of total US currency is held overseas because, in countries where there's, for example, an unstable political environment, dollars have traditionally been viewed as a very safe asset. And so you may not want to put money in the your local bank. And it's kind of inconvenient to store gold in your basement or someplace. It's much easier to carry around, $2,000 in paper currency. And so what kind of currency do you want to use? Well, US dollars are common. And then it's used a lot in illegal activities. So a lot of the drug trade is all done in cash. So a lot of US dollars are held overseas.
That makes sense. So here's kind of a little lightning round. So these are some of the conspiracies that I think are, within the scope of our conversation, at least. We can't really go back and litigate the reasons for the Kennedy assassination or anything of that order. But one thing is that people kind of think that the Federal Reserve prints money out of thin air. Can you speak to whether this is true or how it's not true?
Well, it's sort of somewhat true and somewhat not true. So the Fed, the Fed doesn't print up currency; it's done by the Treasury. But if when bills in circulation get soiled, banks send them to the Fed, and the Fed just takes new dollar bills that the Treasury has printed for it and sends it to the bank. Most of the action in Fed policies deal with bank reserves. So banks have accounts with the Federal Reserve, and they're required to keep certain balances in that are based on their deposit levels, so that they have, in some sense, cash on hand in case there are withdrawals. So their vault cash also counts as reserve, the money they happen to have in their vault. And the Fed can create reserves out of thin air. And a good example is that the Fed's balance sheet during the global financial crisis rose from just under $1 trillion. So that's the assets that it had. Well, I should mention, the dollar bills you have on the top, it says Federal Reserve Note.
Yes.
That's a liability of the Federal Reserve. If you have a dollar bill or a $100 bill, the Fed owes you that. Under a gold standard, the central bank, if you brought that into the central bank and said, I want to pay me back, they'd have to give you gold. Now all the Fed has to do is give you another new dollar bill or $100 bill. but
Oh,
it is a
okay.
liability. But most of their liabilities are in the form of reserves, and those are held in banks in their accounts. And so during the financial crisis, the the outstanding assets held by the Federal Reserve were just under 1 trillion. They swelled in the global financial crisis and then under COVID to almost $9 trillion. Well,
Wow.
how did the Fed end up with $8 trillion more in assets? Well, most of that were government bonds that it bought on the open market. So, for example, a bank might hold government bonds. The Fed says, I'll buy those from you. And so it buys them at the market price. And the way it pays for it is just crediting that bank's reserve account with, the 100 million in bonds it just
Yeah.
purchased. So it's just an accounting entity, so which is sort of equivalent to just creating it out of thin air. You give me this bond, I'll just up your balance by $100 million. And so that's how it bought all those assets. It bought
Gotcha.
mortgage-backed securities. It bought short-term government debt and long-term government debt. So in that sense, it can swell its balance sheet up out of thin air. If you want to add assets to your net worth, you usually have to buy them with real money in some sense.
Yes.
You just can't say, oh, tell your broker to, well, add $1 million to my account because I want to buy $1 million of something. So in that sense, it's an accounting identity, and it is in some sense kind of created out of thin air. The Fed buys an asset and just adds the reserve balances to the bank's account. Now, banks usually don't want to hold reserves. They're higher earning assets. So
Mhm.
they'll use those reserves to buy other assets or to make more loans. And so increasing reserves or decreasing reserves can help expand credit in the economy, expand spending, and boost economic activity. Taking reserves out of the system can reduce lending and slow the economy down.
Okay. So this is something that I feel like you can speak directly to. Is the Fed a private entity? In what terms is it not?
Yeah. So as I mentioned, it's this odd combination of the two. So the member banks of the Federal Reserve System, so Bank of America, Wells Fargo Bank, Chase Bank, they are member banks, and it's the member banks that own the regional Federal Reserve banks. And so in that sense, they're a private entity, and they appoint the board of directors of those regional banks who appoint the president. Now, the board of governors in Washington, D.C. can veto their choice of president, and that has happened.
Yeah.
But the regional banks are technically private entities. But the central Federal Reserve System, headquartered in Washington, D.C., is a government agency created by the Congress. And the Board of Governors are, they run the system.
Yeah.
So it's an odd combination that I don't know of any other country that has a similar structure.
Okay, so I did not know that. I thought maybe this was a structure that many people had repeated, but that is just a U.S.
Yeah, as far as I
function.
know now, in part again, 1913, the
Yeah.
U.S. was not one well-integrated economy.
Yes.
And for political reasons, when it was created in Congress, senators in other states wanted to have a regional bank. The senator from Missouri must have been very powerful because there are two regional banks in Missouri, in St. Louis
Yeah.
and in Kansas City, Missouri. But it was in part to disperse the financial power out in the country because they
Yeah.
had very different needs. Farmers had very different credit needs during planting season, and anyway, and it helped smooth some of the seasonal variation.
Yeah.
But it's unique.
Gold standard. So people, if they're thinking a little more conspiratorially, they'll say something along the lines of, Nixon got rid of the gold standard to appease the globalists, or usher in some kind of new era. But can you maybe talk about like what the real reason is that we got rid of the gold standard? What was the logic behind that?
So kind of two key moments were in 1933 when FDR took the U.S. off the gold standard to allow the money supply to expand, basically. Uh, uh, the gold standard constrains monetary policy. And if you want to expand the economy by, expanding the money supply to try to boost economic activity, you can be constrained by the gold standard. And so FDR took the U.S. off gold and and forbid private ownership of gold in 1933, and that was to fight, in part, to fight the Great Depression. And for somewhat similar reasons, that is, delinking monetary policy from the gold standard, Nixon took the U.S. off of gold in 1971. I vividly remember that because I was traveling in Italy at the time and got up and we were going to cash some dollars to get more lira, and the banks were not accepting any dollars. You couldn't.
Oh, interesting. Okay.
So I had to go to a department store and buy a sweater so I could get some lira in change to at least buy my latte for in the morning or something.
Yeah.
And then crossed into Switzerland, and they were only letting you cash $20 per day into Swiss lira. So, but that was again, the U.S. had been experiencing inflation. So as prices rise, every dollar buys less and less in terms of goods and services. Just price of something doubles, you need twice as many dollars to buy it. But the price of gold was fixed at $35 an ounce.
Yes.
So there was an incentive for U.S. residents couldn't hold gold, but foreign countries had gold stocks. And so they wanted to convert their dollars, which were becoming worth less, into gold, and they could do that at this fixed $35 an ounce price. And so the U.S. was experiencing a gold outflow, and to stop that, Nixon closed the gold window. He stopped redemptions of gold, bringing dollars to in and redeeming it in terms of gold. And so again, it was to delink sort of monetary policy in the U.S. from what was going on in the rest of the world. And the price of gold, once it was delinked from the dollar, and because dollars had become worth less, it had risen from $35 to $300 by 1973, so 2 years later, and then $800 in 1980. And I don't know what it is now. It's a lot.
It's up there.
Gold price has really risen. So
absolutely.
Yeah. And actually, much of the gold stock in the world ended up in the U.S. after World War II because countries sent it to New York because of the war going on in Europe. And the U.S., kept it in the basement of the New York Federal Reserve Bank for years. In the 1960s, as we had inflation, as I said, countries were trying to redeem their gold. And France even used both ships and airplanes to physically move their gold over to France. Whereas New York Fed had been, they had basically a room that said, this is the gold of the UK, this is the gold of France, this is the gold of the US. And they could just move the gold from one room to another. But France didn't trust the US, so they actually shipped their gold back to France.
Interesting. So one thing that seems kind of fishy on the face of it, is it true that the Federal Reserve has never passed an audit?
So the Fed has never failed an audit. And now those are financial audits, and hopefully the central bank keeps good books. And so it's never, it only started being audited in 1996, I believe. And it's been audited annually ever since then, and it's never failed. Unlike the Department of Defense, I should mention, which has failed its last 8 annual audits or something. Anyway,
you stole the words out of my mouth.
Yeah, okay. So there have been a lot of people calling for audits of the Federal Reserve, but often what they mean is they want to audit monetary policy. They want somebody to come in and look and examine at how the Fed conducts monetary policy. And I think those calls sort of grew as the Fed expanded its balance sheet to try to deal with the financial crisis and then with COVID. So it was involved in helping rescue financial institutions and various things.
Yes.
And anytime when, a federal agency suddenly its balance sheet balloons from $1 trillion to $9 trillion, senators and congressmen say, hey, what's going on here?
There's some questions, yeah.
And so, but that's a real threat to Fed independence because you need the Fed for monetary policy to be able to deliberate about what seems to be best for meeting these twin goals of low and stable inflation and maximum employment, and not worry about, independent auditors. How would they evaluate what the right trade-offs are? And so the Fed has resisted audits that might cover monetary policy. But they've always had, or since 96, they've had financial audits.
My next question to Dr. Walsh is the debt trap question that I teased in the monologue. Unfortunately, the Zoom recording cut it off.
So there's a kernel of truth to it, but it depends upon how our politicians behave. And here's the idea. I think this is what is behind that view. If you borrow $1,000 at an interest rate of 4%, at the end of the year, you owe $1,040.
Yeah.
Well, suppose you just borrow that $1,040 to pay off the old debt. Then at the end of the next year, you owe $1,080. And if you just borrow to pay that off, the following year, you'll owe even more. And if you keep going after, I worked it out, let's see, after 20 years, you'll owe $2,192. So your debt is just growing because you're never paying any of it off. And so the interest just accumulates and you owe more and more. Now, what any sensible person would do is not just keep rolling over the borrowing, but you'd pay back a little of the debt each period. So suppose at the end of the first year, you paid off the $40 of interest, plus let's say $10 more. Then at the end of 20 years, you'd only owe $800, not the $2,200 that if you just rolled it over. So it really requires that the debtor, in this case, the government, repay some of the debt. And that's not happening. So if you look at the projected path for the debt, it's really just exploding.
Yeah.
And so I think by current projections by the Congressional Budget Office, which is a nonpartisan office, is that by 2030, the US debt relative to GDP, because whether the debt's a burden sort of depends upon how big your economy is. So you want to look at it relative to GDP, will have exceeded the previous peak, which was reached in 1946, when the U.S. government borrowed a lot during World War II. Makes a lot of sense to borrow to finance a war because you lose the war, you're in terrible shape, and then you pay off the debt after the war. And so U.S. debt as a fraction of GDP peaked in 1946 and then declined over time. But now it's projected to reach and exceed that peak in 2030. Now, the Congressional Budget Office, it's a projection, it's not a forecast. And their projections are based on current law. So what are the current spending plans? What are the current tax plans? And so often what Congress has done, particularly when it is, say, doing a tax cut, it says, well, the tax cut is only going to last for 10 years and then it will expire. Mm-hmm. Now, it's unlikely that the Congress doesn't extend the tax cut. But by saying it's going to expire after 10 years, the CBO has to do debt projections on the assumption that it does expire. Now, a lot of Trump's recent tax cuts in the big, beautiful bill were made permanent. So they will be permanently lower U.S. revenue. So we're currently on an explosive path unless something changes. And so that's a real danger.
Yeah. Well, that doesn't sound necessarily like good news. And a lot of that sounded like an indictment on because I heard you say that it depends on how the politicians
Yeah.
respond.
And it doesn't
Yeah,
really have much to do with the Federal Reserve.
gotcha. So I hear so that decoupling, that's kind of like the politician's fault, and the fact that you would need to be paying off some portion of the debt. Those are kind of why that conspiracy doesn't hold
Yeah.
water.
Yeah.
Okay.
So,
Yeah.
in many ways, it's like companies borrow, they have lots of debt. But suppose they said, well, we're never going to use any of our profits to repay the debt.
Yeah.
Well, who'd want to hold the debt if you're not going to be repaid? And so at some point, foreigners as well as U.S. residents might decide, I don't want to hold U.S. government debt. They're never going to pay it back.
Yeah.
And then it just collapses in value and you're in a bad shape. Or there are accumulated political pressures to force the Fed to monetize it. That is, just print money to pay it off. Because the debt's in dollar terms, we can always just have the Treasury run overtime running the printing presses and just print up a lot of dollars and pay it off. But that's the road to hyperinflation.
Do you think that the Fed is doing a good job of educating the public about what it does? I think that, if someone was going to say why there might be so many misconceptions or conspiracies about the Fed, one might say, well, maybe they're not doing a good enough job educating. Do you think that's true?
Well, I'd give them high marks for trying. They do have a lot of the Fed governors and the presidents of the regional bank go around to, things like local community meetings and stuff, and they give lots of speeches and stuff. I think financial markets are very well informed about what the Fed is doing, but the general public less so. Now, in 2012, for the first time in the Fed's history, Chairman Bernanke had the Fed issue the statement on longer run goals and monetary policy strategy. And that's where they really laid out that, what we mean by price stability is 2% inflation. And it gave some indication of what they meant by maximum employment. And so that became much clearer, and they talked more about their strategy. But I'm not sure, everyday Americans read that statement.
Yeah.
In fact, they revised it in 2020 that made it much more confusing. They revised it again in 2025 to kind of make it clear.
Yeah.
So I think they're trying to do a reasonable job on the dual mandate side, whether their overall goals. Where they've been less successful is in explaining their balance sheet policies, why their balance sheet is so large, why it's composed of, why it's composed of things like mortgage-backed securities and government debt and so forth, and why they were shrinking it for a while, but now they've halted the shrinkage of the balance sheet, and those have monetary policy consequences. And there, I don't think they've articulated clearly what their strategy is or why they're expanding or contracting the balance sheet.
Okay. It also kind of seems like, you can chalk it up a little bit to most ideas of conspiracies, just that, we have sort of these funnels and these information vacuums, and it's kind of lucky that any of us agree on one thing at all.
Yes. So just if I can interject, an example of where even misinformation may be helpful is this issue of, again, comes back to gold. Is the gold really in Fort Knox? Fort Knox and the Federal Reserve Bank of New York are the two places it's stored. And, in 2017, a committee from Congress went to inspect the Fort Knox gold stock. It was the first time they had done that since I think sometime in the 70s.
Yeah.
And there's actually a Gold Reserve Transparency Act of 2025 that was introduced into the House and Senate last year. It didn't go anywhere, but it calls for a full audit of the gold reserves. Go in and count the gold reserves, check the purity of the gold, and so forth. But an interesting question is, suppose those congressmen in the 70s or the ones in 2017, they go to Fort Knox, they go down, they look at what's there, they come back out and announce that the gold's all there. It's safe. We saw it.
Yeah.
Suppose it hadn't been down there, but they came out and announced that it was. What difference would it make? We're not on a gold standard. Gold plays no role in our monetary system. It may only be the belief that it's there that is important and not whether it actually is there or not.
Got it. So in that faith-based system, though, would it be kind of dangerous if the opposite was true, like there was gold in there and they came out and said, guys, there's no gold in there?
Exactly.
Okay.
So that would probably cause a panic because people would, well, first of all, who took it,
Yeah.
But there it might create a panic or a real question of the stability of the U.S. They can't even keep track of their gold.
Yeah.
But so it's interesting. There's sometimes where just the belief that something is there is all you need to maintain value. I think it was the Yap Islands in Micronesia that used these big stones as a form of money.
Yeah.
And I don't know if this is apocryphal or not, but apparently one time they were transporting one of these stones from one island in the group to another, and the canoe sank, and the stone sunk to the bottom of the ocean.
Yeah.
Well, they could still use it because they knew it was there, and so you still have people sort of trading claims on this stone, even though nobody physically had possession of it. So that's sort of like the gold in Fort Knox under a gold system. As long as people believe it's there, you're fine. But,
yeah. That's a great metaphor. I like that. It's not even a metaphor. It happened, but that's a great way to think about it.
Yeah.
Last one, which is, this podcast. What is one conspiracy theory that you believe in?
Yeah, so this is a serious one.
Okay.
So I guess I call it something I worry about. Belief may be a little strong, but I worry about the Trump administration picking incompetent administrators to weaken confidence in the U.S. government.
Yeah.
So that's a worry I have that I mean, it's important that people have confidence in their government, that they believe the government is operating, effectively and efficiently and trying to do a good job in protecting public safety, maintaining the financial stability of the U.S. and the sustainability of things like the debt. But one way to weaken that confidence is to just put a bunch of incompetents in charge of things that. So I worry that that's the underlying strategy of the Trump administration is we're going to let them.
I fear the bar for conspiracy maybe be low on that one. That one might just be happening. Absolutely. Awesome. Well, thank you so much, Dr. Walsh, for sitting down with us today and talking about central banking. I think that cleared a lot of things up, especially the hyperinflation question, because I know that's at the core of a lot of what we hear these days about central banking. So thank you so much for sitting down with us.
My pleasure. Nice chatting with you.
Yes. And have a good day, Dr. Walsh.
Thank you.